Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing H World stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 12 billion market cap. They're trading at $38 a share and they have 321 million shares outstanding. H World Group is a Chinese hotel management company. They operate 9,000 hotels with over 900,000 rooms. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They report all their financials in Chinese yuan, but I converted those numbers to US dollars since we're looking at the ticker that trades in the US. Free cash flow was negative in 2021, positive in 2022, only 72 million. Then it blew up, 950 million in 2023 at 1200% growth. It regressed a little to 800 million in the trailing 12 months. Look at their margins, 25%. US companies are around 10% or less. Net income is a profit or loss on the income statement. It's revenue minus expenses, negative in 21 and 22. Finally back to positive in 23. Still positive over 500 million in the trailing 12 months. Revenue looks real good, 1.8 billion to 1.9 billion to over 3 billion to 3.2 billion in the trailing 12 months. And they do pay a 1.5% dividend, so it costs them $190 million a year in dividend payments, which they can easily afford because they have over 800 million of free cash flow. Here's their revenue from 2011 to 2022. Also their net income, which is in Chinese yuan. You see their net income was negative in 2020, 2021, and 2022, but we just saw earlier it's back to positive in 2023. Their net income in the trailing 12 months is 500 million US dollars, which is about 3.5 billion Chinese yuan. Much higher than prior years, so they're well above 2019 levels. And their revenue is about 21 billion in the trailing 12 months, much higher than prior years. It's easy to convert from US dollars to Chinese yuan. You just multiply or divide by 7. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 13 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $11 billion. We divide that by 320 million shares. And we get a calculated stock price of $36. They're trading at $38, so they're trading at a 7% premium. It's a sell according to the model. Their WACC is a bit higher than the US lodging companies. If their WACC was in line with US companies, it would be around 9%, and they'd be undervalued. But they have a high WACC, which makes them overvalued. There are 12 companies in the same industry as H World, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. In terms of CapEx, they spend 133 million, higher than the average. CapEx are the investments in property, plant, and equipment. So when they buy the land or build out the hotel, that's CapEx. A high debt to equity ratio. For every dollar of equity, they have $2.90 of debt. They pay a good dividend, 1.6%. Second highest in this list. Wyndham pays the most at 2%. They generate a lot of free cash flow, 800 million. They rank 4th in market cap, 12.2 billion, far behind Marriott, a little behind Hyatt. Really good price multiples. They're trading at 8 times book value, 23 times earnings. A really good price to free cash flow relative to the top 3. Greentree is better, so is Ator. They're trading at 4 times revenue. Not as good as Hyatt and Marriott. They generate 3.2 billion of revenue between the median and average, and they're growing the most in this industry. Their 5-year annual revenue growth rate is 15%. Nearly double Hyatt, 5 times Hilton and Marriott. If you put $10,000 into this company 10 years ago, you probably wouldn't be as happy as you should be, because 3 years ago, your $10,000 would have been over $100,000. Now you're down to $76,000. Still a 23% annual return. Let's take a gander at their first quarter financials. They have 9,817 hotels, 955,000 rooms. So getting close to 1 million, that's a big milestone. Their revenue in the first quarter is lower than the fourth quarter of 2023. Revenue from leased and owned hotels, 3.1 billion. These are in Chinese yuan. Managed and franchise hotels, 2.1 billion. Managed are hotels they manage and franchise. You gotta hand it to the Chinese. They make everything efficient, even the words. Combining the words saves us time. The big drop is lease and own hotels. That was $3.5 billion. Now it's $3.1 billion. But it is up from the first quarter of 2023. Usually the fourth quarter is usually the best quarter of the year due to the holidays, more people traveling. Here's their balance sheet. Current assets, $1.5 billion US. Current liabilities, $2.1 billion. So they don't have a good current ratio. It's below 1. About $1.1 billion of cash and short-term investments. Their biggest asset is operating lease right-of-use assets. These are assets another company owns that they lease, but it's carried in the balance sheet as if they own it. That's why it's in the asset section. But you'll also see in the liabilities section how much they owe on the asset, the lease payments. That's right here, $3.3 billion. Total liability is $6.8 billion. They don't have much debt, only $228 million. Their equity is assets minus liabilities, $1.7 billion. Their revenue for the first quarter, $700 million. Total expenses, $600 million. Operating income of $139 million US. Net income of $90 million. Last year they had 3.17 billion shares outstanding. Now they have 3.14 billion. Here's their statement of cash flows. Operating cash flows, $120 million. So to convert to Chinese yuan, you multiply by 7. Or to go from the Chinese currency to the US, you divide by 7. In their investing section, they spent $39 million in CapEx. In their financing section, they spent $75 million in stock buybacks. Last year, they didn't spend anything. $290 million of dividend payments. Adjusted EBITDA went up from $1 billion to $1.4 billion. That's $200 million US. They only own 600 hotels, 9,100 are franchised. They have 3,000 hotels in the pipeline, so they may grow 30% over the next few years because they're currently at 9,700. The RevPAR went up, this is in Chinese yuan, from 257 to 280, up almost 9%. That's revenue per available room, so roughly $40 US. Pretty cheap room. Occupancy went up from 77% to 78%. 329,000 rooms in Hang Ting Hotel, 264,000 in G Hotel. Those are their two biggest by far. Let's look at a company on Simply Wall Street. Its last price 36, 11 billion market cap, down 12% in the past week, down 4% in the past year. Let's see what they say about the company. H World Group develops, leases, and owns managed and franchised hotels in China. Their brand names are Hang Ting Hotel, Ni Hao Hotel, High Inn, Elon Musk Hotel, Z Leap Hotels, Ibis Hotel, G Hotel, Orange Hotel, Starway, Ibis Styles, CityGo, Crystal Orange, Intercity. Pretty cool names. Mansion, Mercure, Madison, Novotel, Joya, Blossom, Stegenberger Hotels and Resorts, Max by Stegenberger, Jazz in the City, Grand Mercure, Stegenberger Icon, and Song Hotels. Their former name is Haozhu Group Limited, changed the name to H World Group Limited in June 2022, founded in 2005, headquartered in Shanghai, China. Here's the stock price since 2010. So it was really low for a number of years. Then in 2016, it started to take off, hitting $50 in 2018. Then it was up and down for a few years, falling below 30 in 2020. It hit its highest point ever, 62 in the beginning of 2021. Then down to 22 in the first quarter of 2022. And then up to 50, down to 30, up to 40. So it's all over the place. Simply Wall Street's valuation is 37. They say they're 2% undervalued. 16 analysts priced this stock at 51. They say it's really undervalued. Their revenue forecast for 2024 is 24.2 billion Chinese yuan, then 26 billion, then 28 billion, which is about $4 billion US. Free cash flow for 2024, 5 billion, 2025, 6 billion, 2026, 6.4 billion, which is about $900 million US. Look how low their revenue was in 2013. It looks like it grows every single year. It came down a little in 2020, but right back up there. And the growth has been pretty exceptional the past 2 years. They were pretty much debt-free in 2013, 14, 15, and 16. They started adding debt in 2017. It peaked at 16 billion Chinese yuan. Now it's down to $5.7 billion. And their equity is pretty close to their debt each year. Now it's a bit higher. $12 billion of equity, $6 billion of debt. And they have a lot of cash, more cash than debt. So they're pretty well capitalized. 57% of the company is owned by institutions, 32% by insiders, and 7% by public companies. The founder owns 23% of the company, then Invesco. Their employee count has gone up a lot from 7,500 to 27,000. And the ticker trades on the Nasdaq, Deutsche Börse, Mexican Bolsa, London Stock Exchange of Hong Kong, and the Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.